our CEO just said we need to be transparent. If you look at the FTX example or any other examples, it seems like to have the head of the exchange be transparent and show everybody what's happening would be the best way forward.
Friends, DeFi is having a moment. Uniswap Labs web app and wallet connect you to the excitement. Swapping and bridging are simple, low-cost, and lightning-fast across 13 chains, including Base, Arbitrum, and Unichain, the new Layer 2 network designed for DeFi. Thanks to deep liquidity on Uniswap Protocols, you get minimal price impact on every trade, now with even greater efficiency through Uniswap v4. Swap, send, on-ramp, off-ramp, and bridge into a bright future. Get started at uniswap.org.
The largest theft in history, $1.5 billion drained from crypto exchange Bybit, the second largest crypto exchange in the world by spot trading volume according to CoinMarketCap data. Remarkably, the exchange is still standing after withstanding a bank run of billions of dollars. In fact, they've arguably emerged stronger, winning the trust of the community, providing daily updates on the state of the exchange, their reserves, and declaring war on their alleged hackers, North Korea's Lazarus Group. Joining us now to discuss is Bybit Head of Institutional and Derivatives, Shunyet Jan. Welcome, Shunyet. Thanks for joining us.
Thank you, Christine. It's my pleasure to be here.
And I appreciate you coming on late in your day in Asia. Have you gotten any rest since the hack? What's keeping you up at night these days still?
It's actually gotten much better. I would say the first, 3 days, I had less than 8 hours of sleep. And I think there are other Bybit buddies are actually still working hard. The ones who are, trying to sort of envision a new future for the wallet team and security. And we still have colleagues 24/7 that are still chasing down the funds wherever they try to bridge it to another network or bridge it or move it to an exchange. So those coworkers are still working hard. I think 90% of my job is sort of back to business as usual.
Oh, wow. Good to hear it. And I'm wondering though, if you could take us back to the moment you heard about the hack or when you first learned that, $1.5 billion was drained. What went through your mind? Walk me through that evening.
Okay, so I think everyone has a different experience. So it was actually, I was in Hong Kong for Consensus. I think it's one of the biggest events in Hong Kong in the crypto world in a long time. And I was out with with a few clients, heavily drinking, having a good time. And I was actually heading back to the hotel. So I think that there's a video of me in the hotel room would look really dark. It was, by the way, it was the W Hotel. That's what it looks like. I wasn't in the dungeon. So I was heading back, and then, everyone starts messaging me and say, hey, do you know what's going on? Do you know what's going on? And I look on Twitter, and of course, one of the forensics experts in crypto world mentioned that $1.5 billion was gone. At that point, of course, I tried to call our CEO and COO, and they were not picking up. Then all of a sudden, they called me and they said, "Here, we're adding you to a group, and we need to make some decisions." So there was a lot of discussions about what to do, and to make sure that no other assets could be hacked. That was the first order. Second order was deciding when and how do we communicate once we assess the situation. So I think our CEO just said we need to be transparent because we've seen where other exchanges, if you look at the FTX example or any other examples, it seems like to have the head of the exchange be transparent and show everybody what's happening would be the best way forward. And also we assess the amount, and the amount is sort of, I don't want to say the exact number, but it is, is definitely coverable by the firm's treasury assets, partners' assets. So, Bybit could definitely survive. And we wanted to make sure that people felt that they were safe. So the decision was we're still going to allow withdrawals. I mean, if you looked on Twitter or an X, CZ even recommended, freeze your assets first. But we thought that would send the wrong signal. So we prioritized retail withdrawals first, and then we prioritized then VIPs and institutions. But I think a lot of the problems during that period of time is that we allowed a blank run, and all the chains were more or less congested. So back in the old days, every time there's always manual override, there's always people that had to approve certain transfers. And during that period of time, it was late Friday night. There's probably 3, 4 people that do this, and you had to wake all of them up. So there was a lag in that. But I think once people were able to get their assets out, and the clarity of what happened with the hack came out, all the trust came back.
I'm so sorry that happened at Consensus. I mean, Consensus is a massive event by CoinDesk, and after a long day, you just want to get some rest. But to have to deal with this at the end of the event is, I'm very sorry for it. But
it was a great event. Yeah, it was a different ending, not the ending I expected.
Thank you. You were so quick online with, getting to your users, talking to them through it, being as transparent as possible. But what was also equally as quick was how you were able to get bridge loans. And you mentioned the company treasury. How were you able to get those loans so quickly? And yeah.
Okay, so I'll answer that in 2 parts. So what is a bridge loan? It's just it's a short-term borrow, and some of it's collateralized, some of it's uncollateralized. And I think I have to thank our CEO for being involved with many of the other leaders in the industry. So I mean, I'll name some. Many of our peers were also very willing to lend us their assets. Some of them without collateral, without interest. And just say, here it is, we trust you, we know. I think a lot of them did an assessment, say, okay, this amount of money is big, but Bybit could probably cover that in a year. And Bybit's going to be around for a long time. So, just for the safety of the industry, and also for, the regular liquidity of the markets, they thought this is something to do. So many of our peers, especially like MEXC, BitGet, and even, Binance, Coinbase, a lot of the other leaders all reached out and said, hey, we could lend you assets if you need to. So we were able to actually get all those assets in within a few hours. I mean, the chain was very congested, but yes, we were able to actually get the assets back on the exchange.
Did I hear you that you, did you say that you guys could make it back in a year?
I mean, that's someone else's assessment.
Wow.
I mean, that was actually on tape when another exchange made an assessment. They believed that we could make it back in a year. That's not my assessment, but
okay. Let's reasonably saying, how fast can you make it back, and how?
Well, no, I mean, most of our revenues are exchange trading revenues, right? Commissions paid by our customers.
Yeah, $1.5 billion in profit in a year.
I can't comment on that, but I think we're a pretty profitable exchange. But we just do it the right way, which is becoming the crypto arc and letting people who want to engage in trading cryptos have that pathway in a very transparent way.
Do you think it also speaks to how quickly things can come together, how quickly money can be transferred digitally with crypto? Do you think this could have happened with banks similarly?
Well, first of all, if it was a Friday night, all the banks are closed. And unless the government actually steps in, I think wouldn't have been saved. In the crypto industry, luckily, I think everyone's a consensus. All their senior people were still up. We were able to make the right calls. And actually, I think a lot of it was the opposite of what you expect. A lot of the other exchange bosses directly reached out to our senior executives and said, how can we help? Which probably doesn't happen in other industries. So we were, very happy, and I was surprised at the move by our competitors.
And in terms of the funding, I also, correct me if I'm wrong, I thought I heard Ben Zhu, the CEO of Bybit, say that he would also dive into his personal funds as part of the treasury.
So I think I don't want to misrepresent him, but a lot of this is going to come from some of this was going to come from our partners of the firm.
Right. So that would that be personal funds from folks in the firm? They would.
Yes.
Oh wow. Okay. Yeah. So you guys are all in. I saw that Bybit had released a security incident timeline of events and an FAQ. It says hackers exploited the user interface of the safe multi-sig cold wallet through a sophisticated phishing attack, masking the specific transaction, which resulted in the change in the smart contract logic of the ETH cold wallet. So Could you break us down in simple terms what happened now that you've kind of dialed in and figured out what happened in this hack?
So I think we don't want to blame anybody because we're all working together to because we're both victims here. I would say Bybit and Safe, and it was I guess the North Korean hackers that was the attacker. But I would say first of all it was very sophisticated, and usually we spend a lot of time to make sure our hot wallet and warm wallet is safe. We sort of didn't think that our cold wallet would be a risk. And we're using, a very mature technology. The smart contract has been audited many times by many smart people. But I guess,
The safe smart contract you're talking about?
yes, the smart contract has been audited. But then it was actually not the smart contract that was at, it was the signing and the spoofing of it at a developer's machine that caused this issue.
So from what I understand, a developer's machine, someone working with Safe Wallet, it was compromised. And that somehow led to the Bybit account being targeted, the Ethereum wallet in particular. And they must have sent some malicious code, some JavaScript code.
JSON, yeah. JavaScript, it is JavaScript, yep.
That went on to the Bybit computers or the
devices, system? Yes. Yeah, the devices that we use to sign. It could be a computer, it could be a phone, yeah.
So I wonder, how much knowledge must they have gathered on you guys? They must have known who the signers were and targeted you.
Yes, I think they were probably targeting anyone who was big at the was using that software or technology provider, and I think that in their assessments that they could probably only do this once, and I think they spent a lot of time to figure out maybe at what one time which wallet had more assets that were not able to be frozen, and I think unluckily that was Bybit's wallet.
And in terms of the UI being spoofed, so you guys didn't have any custom UI for you, so it looked like any ordinary safe wallet interface, if you will, and yep. So you wouldn't have been able to tell the difference, and so somehow they were able to change that and get all your assigners to approve.
Yes, I think Ben made it very clear that it looked like any other time that we've signed in the past. So, visually it looked the same.
So I guess the question would be, how do you prevent something like that happening? I see that, on the safe side of things, they say that there was a problem with blind signing, perhaps, and that may have been a reason why, that another reason that this was vulnerable to a hack attack.
I think that could be one of the reasons. There's things that we also, I think both parties could have done better. I think from our side, we potentially could have used more solutions, smaller wallet sizes, to decrease our risk. And I think there's many ways that you could, that holes that could be exploited. And that was just one of them. So I'm not going to say that this is their fault, or if we did some other way. I think we were using an industry standard way, so it wasn't like we're doing something completely different from what anyone else would do.
Smaller wallet size, that may have been a learning lesson there. I also read, there should have been 2FA, two-factor authorization, so that if there ever is any signing, it has a way of verifying each user through a second method.
I'm not sure if that would have really helped in this case, but our exchange has 2FA for all of its transactions. But they could have. I felt like if they hacked, unless that company kept their seed information somewhere else for the 2FA, they could have just gotten that and spoofed that logic also. But I'm not just thinking from a North Korean hacker perspective.
So I guess what measures has Bybit adopted since then to prevent something like this from happening?
Okay, so one way to do this is to make things more inefficient, and that's what we do, and we're exploring other solutions, and also like the other risk management measures that we talked about. It could be either an external counterparty or building our own NPC kind of system.
Mm-hmm. And right now, are you reasonably secure that all the wallets are safe?
Yeah, we're pretty secure, and I think most of our top clients after the announcement feel we're pretty safe.
And I think Ben mentioned something about moving the security and tech in-house rather than relying on a third party like SafeWallet.
That's correct. So that's one of the options. I think it could be one of the stronger options. It could be a combination of both. We haven't fully decided, but moving it fully in-house with maybe with some consulting help might be the better way. But we're not sure yet.
I was looking at online, from some questions from folks, including CZ, the CEO of the former or the founder of Binance. He was asking, what does compromising a safe wallet developer machine mean? How did they hack this particular machine? Was it social engineering, a virus? Have they told you at Bybit, how the safe developer machine was hacked in the first place?
So I know they're actually looking at other, they're doing the audit themselves. So Bybit, we hired 3 external auditors to reach our conclusion. 2 have already released it, and 1 is coming soon with a similar conclusion. They just haven't typed it out yet. We don't want to second guess them, and they're going to come in with also, I believe their independent assessment. Then everyone in the world will know what happened.
And how did a developer machine have access to an account operated by Bybit?
I would need the safe assessment. I think that maybe some procedures were in there weren't as tight as they should have been. Yeah, I'm not sure, so I don't want to comment too much on that.
Okay, and you guys were targeted. I suppose you were the largest address in Ethereum managed by Safe. Why do you think that others weren't targeted?
Well, because I think if you were the hacker and you did this once, after you do one big movement, people would notice on the chain, and then people start questioning, and Safe would probably close down, or everyone else would just lock everything or turn off their access. So they could only really do this once, and I think they just found the biggest one.
So they could have So why do you think that they only targeted one wallet? I guess that because they had just access to this Ethereum wallet, or why didn't they try to go after other wallets and
Well, I think this was so big, right? So if they did a small one and they got caught, and then everything was frozen, then there would be a reassessment. Then it wasn't worth their time. So I think they wanted to get the biggest one, and then if they went for another one, I think because everything, like anytime you have a big movement on chain, the whole crypto world knows, and I think. All the security firms, all the other exchanges, the prop hedge funds are all like, oh, something just happened. And if you were to do that again, everyone knows where it's coming from. So to have something similar and happen again, I think all the people who knows this wallet belonged to us would probably also, we would tell them, or someone else, or the other exchanges would probably also enact various measures to protect themselves. So I think it was only a one-time move they could do.
And how was your disposition throughout this whole ordeal? Was it, hunker down, keep calm, carry on, or was it panic?
I don't think it was that much panic. I think that the timing wasn't great. Like I said, it was Friday night. Everyone's like, happy drinking. Bybit had certain events, and after the events and dinner, coming back. So everyone's relaxed, and then this happened late at night. So we had to get everyone up, get everyone ready. And I think the first few hours were quite difficult, mostly because it was really a bank run. And even when you reassure clients that your assets are safe, they really don't believe you until they move their assets out and can feel it. But we talk about the blockchain being verifiable, being great, but when there's a bank run, the chain sort of slows down. and there's manual processes, there's automatic processes, and it slows down. And I think that added to it. And also because we prioritize certain set of clients, like we prioritize retail first, our institutional clients were very unhappy. And they say, why can't I be the first one to do it?
You mentioned a bank run. Now that the dust has settled, more or less, how much was withdrawn? If you have stats on how much was withdrawn, the timing of it all, how many?
I think DeFi Llama had the correct number. I think it was around 5 billion US.
Okay, yeah.
But what's surprisingly that within 2 days, actually, we had inflows again.
From the same, do you think was it from the same clients who took the money out? They were starting, okay, they're good. We're going to put that money back.
Yeah, I think that's yes, a large chunk of it was from the existing clients.
So, do you think you've built more trust after this hack, or?
Oh, we hope so. I think long term, we have built more trust and in the community, and I think this is the first time my mom messaged me. It's like, hey, I saw something related to your job. This is and mainstream news. We're covered everywhere, and I think the way we handled it was with transparency and I guess we were responsible for our clients, right? We put our clients first, and we're fully transparent throughout the whole process. So I think that gained a lot of trust. And in the crypto industry, trust and security are very important, right?
Yeah, I think you've elevated the standard for how crypto exchanges will be measured in the future in terms of their response to related hacks. So, on that note, how well, you mentioned how you were able to recover, or rather, have funds, bridge loans and whatever. So how is the liquidity pool for ETH right now? I saw that it's 1-to-1. Can you also tell me how you were able to get ETH so fast, so quickly?
Okay, so actually, I'll tell you this from a trader standpoint. Worked from trading firms in the past. So we borrowed via bridge loan a huge amount of physical ETH from various exchanges, OTC providers, and we put ETH on our exchange, so it was equal to the amount before the hack. So everyone who wants to withdraw it can withdraw it. So that was what we did. But then all of a sudden you see that I think there were a lot of people on Twitter and say, "Wow, now Bybit needs to buy a huge amount of ETH, physical ETH," which we actually didn't need to because we borrowed it. So of course, when you borrow something, you have to return it. And when you're borrowed, so in theory, we're short huge amounts of spot ETH. But but on our exchange, we're a very liquid perpetual contract. So we more or less hedged it out. So we're long ETH futures and short, I guess ETH spot, and then slowly over time we unwind that position and we, on our own exchange from other clients, we could buy the ETH back and close the per position. So I think there were certain times on X where people were saying, "Oh, Bybit, is lying. They actually don't have all the ETH because they see OTC inflows." But in reality, we're short. We need to return it to somebody. Right? We need to return it from people we borrowed it from. So as we get more physical assets in our exchange, we return the ones back and unwind our own per position. It was a hedge.
Mm-hmm. But now you have this huge debt. So how will the $1.5 billion loan be repaid over time?
Well, I mean, so it's everything is given to the client already. So we don't owe the client. This is really sort of our CEO actually made a comment and said that for all the employees that are worried, your salaries and bonuses will be as normal. So we can only assume that this is going to come from mostly our partners.
Mm-hmm. So, in terms of withdrawals and deposits, are you guys pretty even keel right now?
Yes, and actually recently it's been, like I said, even I think it was almost 2 days afterwards we have more deposit than withdrawals.
Okay, very impressive. So if a user who wants to put money into a trusted exchange is looking for one, what should they be looking out for?
I mean, there's a few things. Is that I think most of the large exchanges have proof of reserve now. So I think that's a minimum requirement. You also want to make sure that they have very good security protocol and risk management on their side. And I think those are that's just from a trust standpoint. And I think the third part is that why do people move things to an exchange? The reason is you could do things with it. You could trade. You could earn, interest on it. You could have asset management. You could, hedge or speculate. So I think these are other important things of why, Bybit itself is successful. Because if you didn't need to do that, you could just put it in your own, wallet instead of moving to an exchange wallet. And the whole ecosystem that comes with it. Like, we have a Bybit credit card, with Bybit Earn. You could do lots of things that sort of fulfills the whole ecosystem. So I would say someone who has good security measures and can do something with their asset. Also, you want an exchange that's actually, has the full ecosystem and is profitable, right? You go to JP Morgan because they have big offices, they're profitable. I wouldn't, go to a bank that has no clients and aren't profitable.
Right. Well, do we know how profitable Bybit is?
I think, like I said earlier, other people have speculated. I'm not going to deny their speculation.
Okay. What are some of the shortcuts that crypto exchanges take that you're glad Bybit has avoided?
I think a lot of the other crypto exchanges look for market share and volume just to legitimize their place. And I think Bybit tried to grow that with, I guess I would call very sticky clients. And what are sticky clients? Certain institutions come and go based on fees, based on other metrics, but are retail and VIP clients. And if you serve them well, they stay with you. So, I would say we do that very well.
Okay.
Attracting the normal users and making them comfortable and giving them all the functions they need. But it's funny that I'm saying this with some of the head of institutions. Obviously, that's the part I need to beef up more.
Well, given this experience, what is the big takeaway, the big lesson that you'll be walking away from all of this with?
On a personal level, is that that sometimes you could rely on your competitors to save you, because we're all part. Everyone succeeds when crypto succeeds, and so that was one big takeaway from it. That it is not bad to help out your competitor or to accept your competitor's help. And yep, sorry, you were going to say.
Well, on that note, I know that there was some controversy about potentially, well, you guys were asking to roll back the Ethereum blockchain in order to, I guess, get rid of this hack. and I wonder, what was that response and your case for making that happen?
Well, I think I think it would be I would say the proper word would be, I think someone made a joke. We were in a podcast and Ben said, are you going to talk to, the Ethereum Foundation about rolling this back? He's like, of course, we'll be begging. I mean, this is the biggest thing we could do. But I think we understand the size versus the original hack on Ethereum with the DAO. That was, 30% of all outstanding ETH. I think this one is, less than 0.5%. So I think from their economic standpoint, not economic standpoint, in terms of the outstanding Ethereum, it probably isn't as big of a push for them to make this change, to roll it back. So, they have to weigh between sort of it being decentralized and actually, or is it Vitalik's computer, right? Which one is it? Now, if it was a much bigger amount, I think one thing we could say is, and I think other crypto, I would say OGs also made a comment, is that now that the North Korean government is the 14th largest, Ethereum holder, is that good? Do you want them to fund a nuclear armament program, anything that's not really great for the global order? And I think from that standpoint, would probably, instead of saying we hope that Bybit could get our money back, I think it's a stronger case to say, do you want to, help a rogue regime, use this money for things that are not good for the world order?
On that note, Bybit has declared war on Lazarus, the hacking group that is based in North Korea, potentially, well, that is thought to be working for the nation state and funding nuclear weapons, their weapons program, etc. And so Bybit has launched LazarusBounty.com. But you're up against North Korea on this. So, I mean, how does that make you guys feel?
Well,
in,
I'm definitely not taking a vacation in North Korea anytime soon, that's for sure. But I think one of the important things is that we're surprised this has happened before. In this Lazarus Bounty, we set a framework where people could query the addresses, and other people who have similarly might be affected in the future could use the same framework that we set up. I mean, Bybit knows how to set up exchanges, knows how to set up APIs, knows how to disseminate information very effectively, and we were able to get that whole web page and systems up so that anyone can subscribe to that information and act on it very quickly. And we have many counterparties, at our competing exchanges that have helped us to do this.
We've seen 43 million of exploited funds frozen related to the Bybit hack. That's about 3% of the funds hacked. And that's thanks to a coordinated effort of various peers in the industry, including Tether, Thorchain, Avalanche, and such. So do you have an update on what is happening with the frozen funds and the recovery efforts?
Yep. So actually, it's still happening. I think it's going to take them a while to, sort of change the funds into something that's useful for them. And I know they're trying on various exchanges, but some exchanges have already connected to our API and know about the funds. Some exchanges, we sort of know, we have contacts at various exchanges. We notify them, and within, sometimes 10 minutes to 30 minutes, they're also freeze their assets. So we've seen this a few times. So I think, any large legitimate exchange or even mid-sized exchange will definitely do the right thing. And so they have fewer and fewer avenues to do this. And, we don't update it real time, but it's usually only when we actually are able to recover it. So I think freezing and recovering are two different things. But I think most exchanges are very willing to freeze it. To recover it is a longer process.
Interesting. I also saw within 48 hours, the hackers had been able to launder $200 million worth of ETH. How do you think underground criminal networks have become so efficient at laundering money these days?
Well, I think the organization we're talking about, Lazarus, has done this many times. So I think they're very familiar with all the various ways you could do this, whether through mixers or going through cross chain. So it's much more difficult, and not all exchanges have full KYC and have all this processes in place to make sure illicit funds don't come in. I would say all the large ones do, but not all of them yet.
I see one of the exchanges that is, I guess, hesitating to make any movement or attempt to freeze funds is EXC. Have you heard anything more from them?
No, I think all the information you heard was actually mostly public. So there isn't anything that we know that's different from what's there. And I think they made a statement that in the past we've frozen some of their funds, but we only do that on the behest of usually authorities that say there's illicit funds. So it's not like we purposely freeze customer assets. So and I guess this once again shows that maybe that exchange has a higher percentage of illicit funds and they don't want to do anything with it.
And you mentioned that the process of recovering funds would be much longer. So I don't know if you could give us the short end of what that might be, and do you have any hope of recovering funds?
Yeah, so it does happen. So usually what happens is that once so the exchange is good with freezing it usually, and then we need to give evidence. Some of the evidence would need to come from various authorities. And once they look at the evidence, then there'll be a process to freeze to release the funds back to us. So it's not something that happens, everything in the crypto world happens very quickly. This goes into the old world.
What are the advantages or disadvantages of being a centralized exchange and being accountable to your users in this case?
I guess, there's one of the advantages of being a centralized exchange is that, I think right now we're not just an exchange anymore, and we've become a bank, a credit card company. We're an exchange itself. I think all of the original CEXs have all branched out because in order to bring crypto to the world, you need to have every part of it, from how to accept deposits, how to spend the deposits, how to earn on your deposits, and now with real world assets coming online. Everyone's seen the success of various T-bill products coming in. It's becoming more and more sophisticated. And also, I think other than FX, the crypto world and the CEX had lots of innovation. We're one of the first to have pretty instant settlement and 24/7 trading, right? And the margining systems we're building are just as sophisticated as anyone else in the traditional exchanges, and you cross margin one asset versus another. So it is a very exciting world to be in right now. And CEX that's the interesting part of it, I would say, because CEX makes it easier. Where if you look at in the DeFi world, everything is still in its own little components, and you really, I could almost teach my aunt how to use Bybit, but there's no way I could ever teach my aunt how to, for example, navigate DeFi.
So as more institutions look into entering crypto, you're the head of institutional. Well, what do you say to them after a hack like this?
Well, so there's actually lots of institutional custody solutions that exist out there. We feel that their assets are safe on our exchange, and for those that actually can't deposit assets on an exchange, there's lots of custodial solutions that we work with where they could park their assets on the custodial solution or a tri-party solution, and they could still trade on Bybit and use all the products that exist. So I think a lot of the institutions, why do they trade on Bybit? It's, there's a few, the liquidity is very good. I think the regulated exchanges that exist in their jurisdiction a lot of times doesn't have the liquidity that they want, and the breadth of products, and also the breadth of tokens with the associated liquidity is very high. So a lot of institutions have come on. I think one statistic was that last year, so Bybit's 6 years old. So last year, half of the institutions are all signed on in 2024 versus the whole history of Bybit. So, and the explosive growth of institutions getting into cryptos, to trade, to speculate, to save.
All right. I just want to wrap up the interview, but, what are some of your final thoughts or, final messages you want to leave with folks after this hack?
Well, I think it's to believe in the crypto community. I think, it's still in the nascent stages and there's a lot to go. And I believe there's going to be a lot of innovation that's going to come. And please stick around for the ride.
Shunyet, thank you so much for joining us.
Thank you, Christine.
All right, that was Shunyet Jan, head of institutional and derivatives at Bybit.
Want market-moving insights at your fingertips? Download the CoinDesk app for news, prices, videos, and events on the go.